Look, just break down what is amid geopolitical tensions, amid concerns over Iran and the conflict. We're still seeing tech managing to catch a bid today.
Yeah, it's a real turnaround from what we saw to start the year in terms of the massive sell-off, driven in part by uncertainty from the introduction of AI, what that would do to traditional software companies, traditional software stocks. In April, we really saw the first constructive tape for the software indices and moving higher, still lower than the broader market, but performing quite nicely. And I think this is really where we're going to start to see a shift from kind of AI panic and uncertainty into AI execution and more discernment among investors around who's really going to be the winners, the beneficiaries from AI, and who may struggle to perform as we go into this new era.
It's interesting, we have earnings still coming thick and fast, and when we're thinking about Palantir has been the eye of the storm in many ways of whether or not it's a software exposed stock and AI is going to manage to upset it in terms of competition coming from the frontier model makers, or if they're able to plow their own path. And look, the numbers were again extraordinary, but the earnings are down. We're seeing Shopify also lower. How are you discerning who is able to retain a moat?
Yeah, so there's a few things that I look for. First is enterprise adoption. So are you selling more to the SMB? Or are you selling more to the enterprise? In enterprise software, rip and replace is hard to do. These are projects that have been budgeted years in advance. Implementation timelines take a long time. You have a lot of services wrapped around that. So you can't rip that overnight. Things that are easier to deploy, you may be able to turn on a dime a bit more, adopt some of the newer technology that's coming out of the foundational labs. So that's one. The second is you mentioned Palantir, and there's a real rotation into the defense tech sector, particularly those names that have a software angle to them. So what is, defense tech hardware, now software getting a lot of focus. And I expect we'll continue to see a lot of tailwinds there, given where you start in kind of the geopolitical landscape and the money that is pouring into national security, and particularly a new way of doing business in defense technology.
Let's talk about the other theme about as we see more efficiency being sought by these companies. Unfortunately, that often means job cuts. Some of it comes with the view that it's because of AI that we're disrupting the labor force. Do you believe, when we're hearing the latest out of Coinbase, 14% of workers to go, PayPal going to be letting go thousands of workers, is this AI washing? Is this just a different kind of focus from fintech, for example?
There's a couple interesting trends going on there. One, you definitely see investors pushing more towards profitability. The ratio of growth to profitability has changed over the past year, with a focus on profitability mattering more than ever, and certainly looking for ways to make cuts that drive that profitability. Businesses are going to do that regardless of AI. But yes, AI is also going to displace certain types of tech workers, but there's going to be a new opportunity that opens up. One area that I'm really bullish on is the services sector that is going to emerge around AI adoption implementation projects. Again, some of these are hard to figure out. How do I want to put those in place? What are the security measures I need to have when I'm implementing AI? And that's where you're going to see a big services push, and that requires some labor to do as well.